Alan, stocks are big in Japan. Last Friday, we saw the Bank of Japan announce another larger round of quantitative easing, and the government's largest pension fund announced it was shifting its allocation away from bonds and into stocks. Since then, the Topix index is up 8%. Does this look to you like a sustainable rally?
Well, it is if we're going to continue on the path we've been recently, which is a move towards companies with better corporate governance. The establishment of a new index full of companies that purportedly have better corporate governance, this Nikkei 400, it's sort of a new benchmark. And the government pension fund is looking at those kind of companies. The Bank of Japan is talking about buying ETFs on this index.
So the equation appears to a certain extent straightforward. More money going into stocks, more money going into stocks with higher standards of corporate governance and investor accountability, better corporate profits, higher stock prices. Is it so simple?
Yeah, what's not to like? It's simple if these companies do a little bit more than just hand out more dividends. Currently, what we're hearing is, and it's good news, I think. I mean, the companies are looking to please shareholders, right, and improve corporate governance, improve capital returns, improve dividends. Okay, that's fine. But remember, the operating margins in Japan they're lower than world.
That's been true for a long time.
Yeah, I mean, partly that may be due to some accelerated depreciation in certain industries, but nevertheless, even in breweries, they're considerably lower than, Asahi and Kirin, much lower than SAB, for instance.
So are we seeing any companies at this point actually behaving better? Or are these changes in incentives and in investment patterns actually working?
Well, they're certainly talking the talk. Let's put it that way. They're returning cash. It's the first step. It's going to take a while. For instance, last week we saw Keyence, a sensor maker in factory automation, announce a big increase in its dividend from 60 yen per share to 200. Shares exploded, right? And that's just in the last 4 or 5 days, up 16%.
So what we're really waiting for, though, is actual changes in the way the companies operate to increase efficiency, to increase profitability, rather than simply changes in the way those profits are distributed. Thanks, Alan.